In fact, let's ask Mayuresh that question. Mayuresh, while obviously the street did see all of these stocks react materially in the run-up and anticipation to these price hikes, on the actual announcement, it was, much left to be desired.
Morning, Devina. Morning, Neeraj. So I think the anticipation was that hikes will come through, and they have taken substantial hikes, no two ways about it. So Neeraj is absolutely right in terms of the quantum of hikes that they've probably taken. And I think it's across operators on a similar note. So I think the question of churn of existing subscribers moving from one network to the other probably remains very, very low at this point of time. Unless Jio probably announces plans which are far lower or at a discount to what the existing incumbents have announced. To that extent, I think there is a risk that the existing incumbents do carry onto their books. But on the other hand, when you're probably talking about the kind of hikes that they've taken and the kind of ARPUs that they've recorded in Q2, 128 odd rupees for Bharati, 107 odd for Vodafone Idea, and we're talking about the whole part of their entire database actually having more of a prepaid inclination, which is the case for the industry as a whole. I think it's a sensible move that they needed to cover losses related to the recent Supreme Court hearing. So to that bit, I think the EBITDA growth should be substantial for the existing telecom incumbents. They've also cut down substantially on capex. So if you see Bharati's balance sheets for the first half, it's 8,800 crores that they've probably spent, which is exactly half of what they've done for the same half, corresponding half of the previous year. So they're very, very conscious in terms of cutting down on costs, and cash flow should definitely improve with this move. But to answer your point, Devina, I think was a large part of this move gestated in the price. To my opinion, yes. But as numbers start coming out, I think more and more positive connotations can actually start coming through the telecom players as their net debt to EBITDA levels start normalizing over the next few quarters. And as customers and subscribers in general start adjusting to the new plans. So yes, I think it's balance sheet healthy from a medium to long-term perspective. From a short-term perspective, I think it's well gestated. I think we would stack it up in this way. I think Reliance with Jio and retail and refining still probably remains number one, Bharti number two, Vodafone Idea number three.
So Mayuresh, a quick question there. Have you done some back-of-the-envelope calculation on what kind of bump up could the SBI Cards IPO give to State Bank of India? And on back of that, would you be a buyer, tactical buyer in State Bank of India?
So Neeraj, I think if you probably value State Bank and if you take the sum of parts, right, if you take the standalone operations and if I assume what Shefali was just mentioning and the core assumptions of their core banking holding up pretty well, even if I adjust for a core adjusted book value of around 225 odd bucks, give it around 1.2, 1.25 times, I think there is a certain value ascribed of almost 280, 290 bucks for the standalone operations. Now, if I toss in SBI Life, SBI AMC, and the kind of growth that the life insurance players have exhibited, I think SBI Life with the value of new business, its products and the pipeline thereof in terms of the gross written premium, I think the return on embedded value and the EV per embedded value probably still remains on the higher side compared to the other players. So there is a certain amount of value that comes around from the life business as well. AMC again, I think has been growing very, very steadily. So again, AMC has a very small portion in terms of the overall value, close to around 14, 15 odd rupees. And then you come to the other parts of their businesses. So I think the investments that they've probably got, say in NSC, in UTI mutual fund, for example, in their securities arm, I think you can ascribe value for that as well. So I think the cards business, I think the kind of value ascription that you're probably looking at or the fund allocation that they're probably looking at, I think it probably looks substantial at this point of time. Really not accounted for that in terms of the overall sum of parts. So Shefali was rightly mentioning, I think if you probably ascribe the kind of numbers that they're probably looking at, you've definitely got more upside coming through from the other investments, including the card business that can get listed. So there is a potential upside that the card business can also give them, which is strictly not accounted for, at least in my numbers at this point of time. So yes, I think as I've always maintained, I think SBI probably still remains top of the stack for us within the PSU.
All right, watch out for that stock though. It has come off from the recent highs of about 350 odd that it hit just a few days ago. But it's taking a breather of sorts like the rest of the market. Biocon, Mayuresh, and now Mylan launching trastuzumab in the US. This is the second biosimilar. Huge market, $3 billion US market itself. They're already in the EU, and with a 33% profit share deal with Mylan, this could be a real kicker for Biocon.
It would be, Davina, and I think the kind of approvals that they're getting through, because if you look at the business model of Biocon, biologics or biosimilars, as we call it, is almost 28% in terms of the top line contribution. Syngene, which is again the research arm, which probably is into CRAMS, accounts for more than 33%, and that's a very, very lumpy part of the overall business that Biocon probably carries. The third element obviously is the small molecule business. And then again, I think when you're probably looking at specialty APIs, when you're looking at the branded formulations business, I think it's expected to carry on a very decent growth. So I think the recent launch that they've probably done in the US in good stead, and you can expect more probably come through from their biosimilar portfolio. Because as far as I recollect in Q2 post their earnings call, that still maintained a very, very healthy pipeline in terms of biosimilar revenues. So the biologicals division was somewhere around $1 billion in terms of expectation by FY22. So I think that's a steep climb if you probably talk about revenues of around 5,500 crores on a consolidated basis, the reported for FY19. So yes, I think all these approvals hold them in good stead. I think the inflection point comes post FY21 when more drugs probably come into the pipeline and more approvals across different geographies start contributing to the bottom line as well. So yes, there is good growth that can get expected, that one can expect from Biocon. I think the earnings can actually improve drastically over the next 2 to 3 years. And that can be seen drastically in terms of even the return ratios, specifically ROCEs. So yes, there is significant potential out there in this stock over a longer period of time.
And the stock's moved up about in 3 months rather, it's moved up about 26% odd. Okay, Mayuresh, coming on Bajaj Finance, what does one do now? I mean, while we saw the excitement around the QIP, the stock moved up to about 4,200 plus, now is sub 4,000. What's the call here?
I think you should still continue holding if you're probably holding on to the stock. Our belief here is that in terms of the outperformance that the stock has exhibited in terms of core parameters, top line growth, disbursements have been stellar for this company, even in times where the entire universe has probably degrown or has probably shown some signs of distress. At the same time, when you're probably talking about the asset quality pressures, the asset quality pressures have not been that significant for Bajaj Finance. So I think the kind of expectation that one lays off, and if one looks at the base effect for this company going ahead as well, there will be some normalization going forward. But again, the access to funds, and because of their better rated quality paper, the cost of borrowings also remains within reach, which means that the NIMs and spreads do not fluctuate in the manner that the other NBFCs probably exhibit. So it's shown far more resilience. It will show far more resilience going forward. The capital raise will definitely help the expansion plans, both in terms of disbursements and expanding their balance sheet. Yes, valuations are definitely on the higher side, but anybody holding on should hold on to a leader like Bajaj Finance.
Z is up about 2%. That's the top gainer on the index this morning. Mayuresh, let's talk about this one and what happens here on and what the focus is going to shift to. While obviously the overhang was, out of the system, it just seems like while the focus should be on the operational performance, with the kind of exits and resignations that have happened, there still seems to be some cloud over the stock.
It seems to be the case, Devina. And clearly, I think the operational performance is going to be extremely key for a stock like Z. I think when you're probably talking about the ad revenue growth for the industry as a whole, it still seems to be very, very sluggish at this point of time. So one can really expect a very slow and sluggish and a gradual improvement in terms of ad revenues picking up. The second element obviously is the subscription growth, and subscription growth has remained extremely steady for this group in general. I think if you probably look in the regional networks and the regional channels, I think the scaling up in terms of both market share as well as subscription addition seems to be pretty strong. The third element obviously is the kind of expenditure that they need on their OTT platform Z5, and that will probably continue in terms of heightened competition from key online players. So the content development on that part and the expenditure in terms of probably expecting the channel to start break even on the OTT front is still going to take some time. But I think it gets offsetted and compensated with the standalone business and the standalone ad revenue and the subscription growth. So I think it will now shift to the operational performance for Z very, very clearly. But till that point of time, I think it's still going to be a range-bound trade for Z going forward.
Mayuresh, have you looked at the internet-based businesses, Affle and InfoEdge? I'll probably even throw in an India Mart there. Is there any which looks attractive fundamentally at the current valuations?
So Neeraj, I think there is tremendous growth for this business segment going forward, because as we are seeing internet penetration, when you're probably seeing digital marketing, I think that's picking up steam in a substantial manner. So I was just reading one report a couple of weeks back, and the kind of growth that they probably expect globally. I think even if that's not replicated in India, but even if it grows at half the pace that the global growth is expected, I think there is huge potential for these sub-segments. When you probably look at and dissect each of these companies that you probably spoke about, there is reasonable amount of growth, as I said, that can come through. And there is enough spending that is probably coming through, both from the corporate side in terms of understanding the need to be on digital platforms, and digital advertising is going to be the key. Having said that, I think for a stock like InfoEdge, for example, I think the business model still revolves around their recruitment business, which is still the cash cow. What they probably ascribe through their holdings in Zomato, Policy Bazaar, and the unicorn valuations that they are probably getting at this point of time, I think that does add to the SOTP valuations. But again, for stocks like an Affle, India Mart, Naukri, I think the valuations probably remain a tad too bit for our comfort. So I think if there is any amount of earnings disappointment, I think these stocks can come crashing down. So I think the valuation comfort is not there with these stocks.
We will watch out for some of these businesses as well, as the 8 minutes have settled down on the pre-open, and Bharati Airtel is at it again. The stock is up about 1.5%. It's arguably one of the most volatile stocks on the Nifty 50 these days, up one day, down the next. The commodity stocks, they've been on expected lines, have come off. If indeed the talks about the trade stress comes out, then you usually see these stocks reacting. And in today's session too, I mean, at least at the end of the pre-open session, Tata Steel, JSW and Hindalco look like starting off low and lower, and Bajaj Finance. One more day of a start which is marginally lower in trade.
Well, we'll see where this ends for Bajaj Finance. 39.39 on the stock, down marginally, just 0.25% though. Let's talk a little bit more about some of these other businesses. And Mayuresh, what are you going to do with a company like Edelweiss, JM Financial, Motilal Oswal?
So again, I think what is surrounding the Karvi episode at this point of time, and again the diversification that all these players have done, I think it is probably a step in the right direction. So again, the diversification should hold out in good stead. But what probably happens in terms of the core business model itself, I think that should probably hold out. So again, I think no direct views on these stocks. But again, the kind of the competition that we're probably seeing in terms of discount brokerages for their core business, the heightened competition in terms of bank brokerages as well, I think that's probably going to take a sting away in terms of the overall revenue growth. So I think no direct views here, sorry for that, but I think there is plenty of competition around in the market for all these players.
Well, that's the other interesting one that you need to monitor in the session, or rather Ujjivan, because remember this whole conversation about whether you're better off buying off the current listed entity because of the math that a brokerage house has put out, and you got to do that math yourself based on the assumptions that you have in order to take advantage of this. Mayuresh, do you have any thoughts here? I mean, this IPO is getting subscribed well. Would you buy the parent as a holding company in the next 5 years? Maybe there will be some merger or shares would be distributed. That whole math that is going around. Would you take action on that?
I think you'll still have to wait for all that, right, Neeraj? So I think whether the merger happens or not, I think it's still going to take a while for that. But if you probably look at the small finance bank statistics at this point of time, I think on most parameters they're probably fulfilling most of the investors' concerns. So in terms of capital adequacy, for example, the tier 1 clearly stands at 18%, which is very, very healthy. When you probably talk about GNPAs, they have come off significantly, so it stands around 0.85, which is very, very good. they've also diversified. So from the microfinance part of their business, which is almost 69, 70 odd percent, the diversification in terms of two-wheelers and other discretionary loans should also probably start propping up their overall advances growth going forward. The only hitch that I probably see is the CASA ratio, which still stands at 11 odd percent, which is languishing probably at that level, but that will show signs of improvement going forward as well. You come to the valuation part as well, and when you probably talk about a price to adjusted book of 2.2 times, it's definitely not cheap, but it's not expensive as well compared to the other private financiers at this point of time. How do you probably ascribe and play the overall dynamics here? I think in terms of the merger going forward, again, I think that's going to take time as well. But for the IPO standalone, I think valuations probably still on their side compared to the larger players. But again, as I said, I think we individually need to take a call because I think we don't have a view as far as IPOs are concerned at this point. But these are the statistics that actually I can put on.
Okay.